Good morning, everyone. Welcome to the European Crossover webinar, and we're on FOMC day and expecting relatively quiet action until then. Although we probably, once we get into that, we'll potentially, I should say, could have pretty wide swinging day. It just depends on how this adds up. If the Fed really continues to push its very dovish stance, we could end up seeing the dollar really take a hit, but only time will tell. We are seeing the euro here at 18.59, as was the cable here. Just a tad bit stronger than we were even yesterday at 28.94. Obviously, things are going to be quiet until then. We'll take a look at the economic calendar, although that's the big thing on the docket. Bear with me. I just accidentally shut off the monitor. Okay, here we go. So we did get UK CPI data that came out on the print, a little bit not as weak as expected, minus 0.6. And see PPI, a little bit weaker on the PPI. And that's going to be it until we come into the States. We do get retail sales at 8:30 and Canadian CPI also at 8:30. With 10 a.m., we do get 10 a.m. Eastern business inventories and NAHB housing market. And then, of course, the big shebang at 2 p.m. Eastern, which is the Fed funds. We do have an accompanying press conference from Jerome Powell. And take a look where we stand here in indices. You can see here that the NASDAQ is pretty much close to its highs here. Here we are on the 2-hour chart. Look at the S&Ps. Pretty close, not too far from their highs also. The key is going to be is they do expect it to be dovish. Do we pop up and then run out of gas and move lower? Take a look at the 2-hour chart. Potentially, we'll see if we could pop up above 11,600 on the NAS. They may run out of gas. We'll take a look if there's any kind of a fib here. Well, 11,508 is going to be the 38%, but we've already been there. You can see here. So this will probably be the key area right in here. See if they can push beyond that and see if there's any actual follow through. Moving back to FX, and we'll cover, or actually, we just cover the news right now. Australian dollar off 2-week highs, New Zealand dollar weaker ahead of Fed decision. The Australian dollar fell back 73 US cents on Wednesday, while its New Zealand peer was weaker too, as traders were hesitant to make the bold bets ahead of the Federal Reserve's meeting later in the day. The Australian dollar held at 72.97, easing from a 2-week top of 73.42 touched on Tuesday following the minutes of the country's central bank's September 1st policy meeting. The keenly watched minutes stopped short of signaling a further cut to the cash rate, wrong-footing the Aussie dollar bears who were wagering on a dovish tilt from the Reserve Bank of Australia. The RBA was held the cash rate at a quarter basis point since an emergency meeting in mid-March, but recently hinted at additional policy measures to support an economy reeling from its worst contraction since almost a century. The interest rate on balances held by the financial institution at the RBA, as well as overnight interest rate swaps, already trading around 1/10%, thanks to the extraordinary measures introduced by the central banks since mid-March. Australian government bonds have been in solid demand. 3-year futures contracts were at 99.74. Investor attention is now squarely on the Fed's expectations of the U.S. central bank will maintain its gloomy outlook on the economy, grappling with COVID-19 pandemic with holding rates near zero. We watch for the Fed's new economic projections, any clues on a potential shift in purchases to long-dated durations, the lowering of the long-term dot projection from 2.5% to 2%, and new forward guidance, said Pepperstone strategist Chris Weston. Let's see, but the dollar will be the key, depending on the reaction on inflation expectations will determine moves in real treasury yields, and that is where equities, the dollar, gold, etc., will take their direction. And the pound near 2-month lows on Brexit worries. Bank of England eyed the British pound held within striking distance of a 2-month low on Wednesday before a Bank of England decision on Thursday against the backdrop of a darkening outlook for the economy. While the central bank is widely expected to hold fire, the policymakers are likely to conclude that the downside risks to the economy are rising for the economy due to rising Brexit uncertainty and renewed restrictions on social activity. John Fayu, senior market strategist at BNY, said the central bank will now have to contend with Brexit and the fiscal uncertainty, and the pound's recent spell of weakness is warranted. A lack of trade deal, Brexit period is complete with certainly change the BOE's conditional assumptions of monetary policy. Sterling held its worst week in the 6 months last week as investors grew more pessimistic about the chance of a Brexit deal being reached before the December 2020 deadline. After throwing the Brexit trade into disarray by proposing legislation that would break international law by breaching parts of the withdrawal agreement, Prime Minister Boris Johnson faces a rebellion from his own lawmakers as a proposed bill called the International Markets Bill moves through Parliament this week. And let's move on and close this out. Yen hits 2-week high on dovish Fed expectations and yuan rallies. Japanese yen inched on higher as traders bet an ultra-accommodative U.S. Federal Reserve would weigh on the U.S. dollar, while Chinese yuan extended gains 1 day after data pointed to better prospects for the world's number 2 economy. Traders bought yen on the belief the U.S. central bank may promise further stimulus, which would likely weaken the dollar and push treasury yields lower. The Fed is not expected to move on rates, but adjustments to the bond purchases are possible. Against other drops measures, the dollar drifted lower or held steady. Last trading at 1/10 softer on a basket of currencies. The dollar yen is one of the more attractive ways to play the dovish Fed, said Westpac analyst Sean Callow, and that the yen was particularly sensitive to the U.S. bond market given Japanese investors are large buyers of U.S. debt. You can brace yourself for some choppy action around the announcement, but when the dust settles, you would think that that will be seeing a Fed that's leaning towards policy to match what they already announced, Callow said. Fed's decision is due at 1800 GMT, followed by a news conference by Chairman Jerome Powell half an hour later. Besides immediate policy, a major focus will be the Fed's economic projections, especially if it spells out where it sees headed inflation and what exactly that means for rates under the new regime. The paucity of the detail could lift the dollar a little, though analysts felt that would probably be short-lived. The market overall knows that the Fed wants to be dovish. It's just that way that the timing may not match what the market wants in terms of giving details in the meeting, said Bank of Singapore strategist. Beyond FX positioning, a soaring yuan was another driver in Asia on Wednesday. So with that, we'll just go on and move into the analysis. We see that the NASDAQ has continued to move higher here. And let's get ready with that analysis. The euro closed slightly lower pre-FOMC. Resistance on Wednesday will be 1940 with support at 1735. So we're going to have wide ranges as we're trying to factor in what's going to happen, or how eventually, actually more important, is how the market reacts. So down to 1735. And on the upside, 1940. And onto the cable. Cable finished the session moderately higher. Resistance on Wednesday will be 29.75 with support at 27.88. And onto the Aussie dollar. Other than wider ranges, I mean, we haven't moved too much in anticipation of, the FOMC from where we were yesterday. So the Aussie finished Tuesday with a medium-legged doji, and I meant to say Tuesday with the medium-legged doji. Resistance on Wednesday will be 73.75 with support at 71.96. So as I mentioned, wide ranges. Onto the Kiwi. Oh, motoring along here on the Kiwi, though. So the Kiwi closed Tuesday a bit stronger, Resistance on FOMC day will be 67.70 with support at 66.20. And on to the dollar CAD. The dollar CAD closed at the upper end of a tight range day on Tuesday. Resistance on FOMC day will be 32.68 with support at 30.78. And the dollar peso. Man, this thing just continues to weaken like crazy. So the dollar peso took another dip on Tuesday. Support on Wednesday will be 20.98 with resistance at 21.28. But wow, it looks like it's just hell bent to go lower. Looked like we had a little bit of a recovery on Tuesday, but here we are back under pressure. And dollar yen continues to weaken here. The dollar yen continued to slide on Tuesday. Support on FOMC day will be 476 with resistance at 655. And that 655 seems rather optimistic. I mean, that is just, look how weak we are. I think we'll have to move that down to about 592. So and to the cash dollar index. The dollar index remains weak. Resistance on FOMC day will be 93.89 with support at 92.18. And I think it's potential that we could go right through that low. We'll see how things work out. But 92.18, 93.89. Covering these extremes. And on to the cross rates. Well, steady Eddie right here. You can see here, no changes. We're just dead in the water right here. So no changes on the Kiwi yen. 70.53 on the downside, which we actually got to 70.54. So 70.53 on the downside, 71.40 on the upside. Actually holding up pretty well in light of the strength of the yen. The only thing we'll move this is just a touch lower. 70.42. And on to the euro yen. On the downside, we had 25.05, but obviously with the yen strengthening, we've really taken a dip in here. Potentially, we're going to look right there, which would be 24.26. And on the upside, right there. All right, on the underbelly. $25.47. Onto the euro odd. And on the downside, we could have 61.54. And on the upside, 62.41. And moving on to the euro kiwi. And on the downside, we're going to have 75.52. And the upside, that might be a bit of a stretch here, considering the way the kiwi keeps strengthening. Let's go to the 2-hour chart. $76.54. And for the Aussie yen, boy, we just in a very, very tight range. Right there's going to be resistance. 77.40. And I still like 76.47 on the downside. And with that, we'll go and move on to the guppy. Oh, this thing's dead in the water. We're not even moving. So that is going to remain the same, 35.26 on the downside, 36.73 on the upside, and then on to sterling odd. May not see a whole lot of movement ahead of BOE. So on the downside, still like 74.90, and on the upside, 76.71. So that will remain the same. And that's going to wrap it up for the bias chart for FX. We'll just go on and jump back. Pedro says, can you take a look at WTI? Okay, bear with me. Here it is on, and pretty good little bounce. We're looking at the 2-hour chart. And October, I'm still on October crude. Let's take a look here. Well, 39.96 is going to be the 50%, but we've got a pretty good little area here at this 38.73. Actually, let's do that. If you look here, crude likes to trade a lot on fibs. So let's look at this extension here. $39.53 is going to be the 161%. So we're just about there. This area right here, this move to here. And it does like to trade on fib extensions. And you can see here, pretty good little zone here at 39.73. Look at that. And that would just come in line right here. So I would be looking between 39.53 and 39.73. And the market may go on and take a little bit of a pause there. And we're right on the highs on this bounce back. So right here between 39.53 and 39.73, potential pause right in there. NAS is still continue to move along. Look at that. And the SPOO's here at 34.10. So we shall have, well, I think we can see a couple of swings back and forth. We'll have the meeting, then we'll have the press conference. So I think the push, obviously, you can see that is to the upside. But once we get up there, potentially with this NAS, initially we're looking at 11,600. We're not even that far away from it at this point. See right here. Maybe we come into around, here's some value right there. 11,672, which wouldn't that too far away to push. They blow some stops. This 739 looks pretty key. So let's highlight that here. there. Really between here and here, but that looks like a pretty good area for them to shoot at. Look, that would be this. Look at that, this rebound high here. Let's just go in and highlight that. Good area for them to shoot at. And you can see a little bit of volume there, and this whole little zone. So pretty good area for them to, if they do make that push, we may see the market a little bit exhaust itself. So that's what we have. Thanks for joining us here, and I'll go on and get the bias chart posted in the room, and we'll see you in the chat room.